Hello friends, today we are going to discuss certain terms and concepts which we hear a lot in mutual fund context. Understanding of these will help one appreciate the nuances in the structure of mutual funds, interpretation of data, and in taking sound decisions. Let's start. First of all, we have NAV, the most common and popular term. You must have heard about a simple financial equation: owner's equity is equal to assets minus liabilities. In an earlier video, we had defined assets. An asset is something which has an economic value and which an individual owns or control with an expectation of future benefit. Liabilities mean financial obligation that arise during the course of its business operations. NAV basically means value of asset of scheme adjusted for its liabilities. Investment along with accrued income like dividend and interest constitutes total assets. Short-term liabilities and accrued expenses are adjusted to arrive at NAV. NAV indirectly captures scheme's profitability. Here profitability is sum of interest, dividend, price appreciation, which is adjusted for price depreciation and scheme expenses. Moving on, we will understand the structure. The structure of mutual fund exhibits division of work, transparency and accountability, and enhances overall trust that an investor can place on the fund. We have sponsor, trustee, asset management company, custodian, and transfer agent. Let's understand their role. Sponsor is the person who establishes mutual fund. They're like a promoter of the company. Trustee, an independent body which act as a protector of investor. They ensure mutual fund is working as per defined objective and in accordance with trust deed and SEBI regulations. Asset management company are appointed by trustee to invest pooled funds into securities as per defined objective. They are also known as investment managers. Custodian are appointed by trustee for safekeep of physical securities or participating in clearing system of demat securities. Transfer agents are responsible for issuing and redeeming units, preparation of transfer documents, and updation of investor records. For SBI Mutual Fund, State Bank of India is sponsor. SBI Mutual Fund Trustee Company Private Limited is trustee. SBI Funds Management Private Limited is AMC. HDFC Bank Limited is one of the custodian. Computer Age Management Service Private Limited is transfer agent. Let's now understand investment objective, policy and strategy of a mutual fund scheme. These are universally used terms and knowing them help in setting right expectation from a particular scheme. Investment objective defines the broad investment charter. For diversified equity scheme, it can be to generate capital appreciation from portfolio of predominantly equity related securities. For balanced scheme, it can be to achieve growth by investing in equity and equity related instrument balanced with income generation by investing in debt and money market instrument. Investment policy. This describes in greater details the kind of portfolio that will be maintained. For example, portfolio will generally comprise of equity and equity related instruments of around 30 companies, which may go up to 39 companies. Or it can be like the scheme may use derivative only to the extent of 35%. Next is investment strategy. Investment strategy of the scheme outlines the approach to be followed in investing the funds to achieve the objective. It includes investment horizon to be considered when evaluating securities, method of determining the appropriate buying price for the securities, selling discipline to be followed, extent of flexibility to be allowed in investing in different asset classes. Offer document is like Kundli of mutual fund. It has all necessary information about the scheme. A correct understanding of offer document is crucial for investment decision. It has two parts. First, scheme information document, that is SID, has details of a particular scheme. Secondly, statement of additional information SIAI has statutory information about mutual fund that is offering the scheme. Reading offer document, though advisable, may not be feasible for retail investor. Retail investor can instead go through Key Information Memorandum. KIM is essentially a summary of SID and SAI. It contains the key point of offer document that are essential for an investor to know to make a decision on suitability of investment for their needs. Contents are namely name of AMC, mutual fund, trustee, fund manager and scheme, important dates, plans and options under the scheme, risk profile of the scheme, relevant prices, benchmark, dividend policy, performance of scheme and benchmark over time, loads and expenses, contact for investor grievances. SEBI has also instituted a system of labeling mutual funds to enable investor to easily assess its suitability to their investment objective and preference for risk. The label will cover following parameters: nature of scheme, investment objective and riskometer. Riskometer is a pictorial representation of risk. Generally, a particular level of risk represents particular types of mutual fund. Low means liquid or money market fund. Moderately low means FMP or capital protection oriented scheme. Moderate means short-term income fund or conservative monthly income plans. Moderately high means index fund, balance fund, equity dividend yield funds. High means sector fund or equity focus fund. In the next video, we will present what thinking goes into selecting an ideal mutual fund. Thank you.